CG Market Watch, cryptocurrency news that you can use. Today's episode is proudly sponsored by Bootstrap Singapore, Cold Brew Coffee, and you know what? We are cryptocurrency traders, investors. You know that we hardly sleep, and I think that it's always awesome to have a coffee that is just great to give you that boost, especially throughout the whole day. All right, so in today's top stories, we have Syscoin Blockchain Compromised. This is pretty big news, guys. So 11 Syscoins apparently were being sold at for 96 BTC, or the equivalent of $6.23 million. Wow. Whoever actually put that order there and got executed, right? I'm so happy for you because for the fact that you could actually exit 11 Syscoins that were trading at 17.9 cents and it has been dormant in terms of trading. Right? Practically nothing has been moving, right? And you know what? You managed to put an order there. Congratulations to you. Not only that, this was probably is it an API hack, or is it an API hack or from the exchange itself, or it was a collaboration from a trading bot? What exactly happened, Andy?
Okay, so the understanding of what had happened, first of all, is to understand what happened to Syscoin. So it was actually Syscoin blockchain that was compromised. It has nothing to do with any exchanges, but when the Syscoin team found out about the compromise, they actually informed all exchanges to kind of halt their trading. Alright? So upon further investigation, for example for Binance, they found out that a certain API linking to Syscoin had certain issue, and therefore, in order for safety reasons, they halt the whole entire trading. In terms of API trading, they reset it. So it has no hack in terms of bot and whatever, but it was actually a compromise on Syscoin that resulted in Binance relooking at their codes and their API and deciding to halt all APIs.
Okay.
Yeah, and therefore, with that, that implies and that implication is that bot traders and algorithm traders who uses API to trade, all right, syncing their APIs from Binance to different sources and whatever not, had a huge impact because the bots cannot respond in time, the algo trading got affected, and that actually impacted the market, right, in terms of prices as well. So that's kind of like the implication coming forth from API problems.
Okay, so if say I was a hacker, right? I think there are certain steps that a hacker would have to do in order to really cause the whole, or at least I would like to safely cash out my coins. Do you think, roughly what are those steps that you think that we could do, or what do you think the hackers are doing at the moment?
Well, okay, so the chain is only as strong as the weakest link, right? And the hackers will always be finding the weakest link.
The weakest link,
not
the weakest link, right?
Yeah, the weakest link. So the hackers will kind of want to find where is the weakest link and then attack on that, right? Yeah. So what is the weakest link here, which is the API? And sometimes certain exchanges are weaker in terms of that, right? So hacking into the API makes more sense, right? Therefore, you shut down the whole system, and then it becomes untraceable.
Right. So if that were the case, right? If let's say this hack was to happen, do you think that there's a way that the hacker could prevent any reversal of the tokens? Because I think there's always the fact that I think Syscoin's mainnet is already live. So there has to be a few things and a few steps that have to be done. For example, there was the hack on CoinRail that happened to MPXS.
Yes.
Right? And that happened, I think, it was during a holiday as well. Now you're having this hack happen on a holiday again. I wonder whether there's some kind of pattern involved. Holidays are like when you have the lowest manpower, people are going for vacation. Okay, I'm not saying that it's like a real pattern, but let's observe what happens next. Hacks have become so repetitive that we are so used to it at the end of the day. We're like, this exchange gets hacked. You have the biggest ones like Bitum got hacked not too long ago. Then CoinCheck got hacked, I think this year or last year. There's so many hacks, guys. So, but you know what? I think at the end of the day, we are getting used to it. And of course, I sincerely hope that no one's funds were lost during this whole hack, and ultimately we can move on to a better regulatory and of course more secure exchanges. So the next topic that we're going to be covering is Economist claims Bitcoin futures killed the strong rally in early 2018. Now, the Fed and prominent economists believe that the Bitcoin futures market ultimately led the cryptocurrency market to crash and record the third worst correction in its history. Yukio Noguchi, a Japanese economist, claimed in a recent column that the abrupt change in trend from a bull market to a strong bear cycle was triggered by the launch of the CBOE and CME Bitcoin futures market in December 2017. Now, it seems that way, isn't it?
Yep.
Right? It seems that way. And ever since the futures happened, in fact, prior to that, there was so much, as of course we run the CG Telegram or the Crypto Grinders Telegram group, and we kind of noticed that we were very bullish initially. We thought that with futures coming in, with CME coming in, CBOE coming in, it would mean that there will be a strong rally in because there'll be more interest, right? Because now there's an instrument for the fiat investors to participate in cryptocurrency. They don't have to have direct exposure to Bitcoin. But that being said, every time it seems to be suppressing the prices. Like Bitcoin prices tend to come down or get sold off when the futures expires. Right?
I think we have to understand what futures do first. So
Sure.
let me just give you guys a quick analogy here, right? And this is what I've learned recently. In the airline companies, right, and especially in aviation industry, in order to kind of fix the price of an air ticket, okay, you realize that a lot of it is reliant on fuel prices, like oil prices, right? So what the aviation industry do is they actually pre-book fuel 1 year in advance, 6 months in advance, and they fix the particular price of oil at that futures rate, right? At a particular rate. So for example, maybe at $80 per barrel, things like that. So any fluctuation coming from new supply, from Saudi Arabia, from Middle East, do not and will not impact the price of the airline tickets, right? This is how it's done in the aviation industry. Now, coming forth and understanding how these future ideas work, you bring it into cryptocurrency, you bring it into Bitcoin. Basically, it's kind of to curb that strong movement of Bitcoin. Now, we all know that it went up by $15,000 in about 3 weeks or so. Yeah, that period of time, remember? So everyone in November was going, oh, BTC is going to a new high, things like that. But we are not going to be seeing that happening, right, in the future, mentioned by Noguchi as well, because there's not going to be a lot of pump coming from it, and it's all because of futures, and because of all the shorting, and people are hedging out of it, they are taking risk out of BTC per se, of the rise, and therefore it controls the prices. Now that being said, futures are controlling the prices in short term to mid term, say a year or so. Now when you correlate the Bitcoin's future with gold future back in 1950s when it first launched on CME, what I understood in 1940s, 1950s was that the first year, when gold futures was launched, it actually brought gold prices lower. Because then people had to hedge out. Remember, gold was a huge hype, a bit like BTC back then. So because of the futures, gold price was being suppressed. For the next 2 to 3 years, it actually improved, right? Futures price actually went up and gold prices keep moving in tandem. Why? It's because media attention comes in. People get to know how to put in fiat. There are more ways that mainstream investing can come in now, and that CME and CBOE are both regulated by SEC. So all the mainstream investors feel more secure with it, and therefore the prices start picking up. So what we're seeing here is maybe futures could be the cause of it, right? For the first 1 year as of now. But as it moves along, as the market matures, what we'll see is that futures will actually move in tandem, or will move even faster than Bitcoins, and that's what we're really hoping for in eventually, right?
And I think also in terms of futures, right, not necessarily there is going to be a delivery of that particular asset class. So I think a lot of portfolio managers, right, would definitely want to use this as a form of hedging, right, for their portfolios, especially if they are heavy in Bitcoin or Litecoin or even BTC.
Definitely.
Right now, I think there are people who are already in the discussions, or institutions in the discussion for Bitcoin ETFs to be pushed out, and that also will allow them to have some exposure on a long-term perspective where you stay invested in Bitcoin. But at the same time, how are we going to capitalize on the downtrends like what we're having right now? Because there are bear markets. We are still in the bear market. So definitely there are opportunities to make money, even though it seems like, oh, it's going to go through a very winter period. But with futures, with leveraging, it is giving that opportunity for everyone to be able to step in and capitalize on this downtrend. Now, the next thing is 5 nations launch tax enforcement alliance to tackle crypto and cyber crimes. So the US Internal Revenue Services, or we call them the IRS, has launched an international task force together with tax enforcement authorities from 4 other countries to take on cryptocurrency-enabled crimes, according to a press release published Monday, July the 2nd. So this is the J5, as they say, and this is going to be comprised of Australia, Canada, the Netherlands, and the United Kingdom alongside with the US. So you're seeing the big boys starting to come in.
Yep.
All right, you're seeing the framework, okay, the regulatory framework, the taxation, all starting to form up to really look into this space, right? And then I think at the end of the day, once we have all this in place, right, you're gonna see the whole space start to flourish.
Yep.
Now, of course, that being said, we have to give ourselves enough room to breathe. So especially people who are investors in the space, your portfolios definitely are not looking fantastic, but at the end of the day, take heed that in the long run, right, you're going to be in the right place. It's just that at the end of the day, do you have the liquidity, and also did you invest in the right things when you created your portfolio? Yep. This is the thing, right? So everyone's wondering what coins to buy, you know, because at the end of the day, they are not aware of how to secure the coins, and sometimes they don't even know what to buy. So Coinbase apparently now offers a custody. But however, the custody is only targeting institutional investors, right? And you know, and when we talk about institutional investors, we're talking about people that these are already high net worth companies or they're high net worth individuals, okay? And to offer this to offer custodian services is very important, because right now I don't have to worry. I'm going to kind of put the responsibility on the exchange. And that's what people want, because when you are someone who is invested in stocks, for example, you actually have a custodian. You have a broker, right? That will take care and house your stocks, as per se. You don't have to transfer your stocks to your home or into a cold wallet, as they say right now. But for us cryptocurrency investors, right, it's way different. We have to buy something. We are worried how much we want to put on the exchange, and then after that we have to put it into a cold wallet. But now Coinbase offers this service, and I think having this service also means that they're prepping for the mainstream to come in. And eventually, I'm pretty certain that the average investor, the regular investors, will also have some sort of a custodial services, but I'm not sure whether or not it's viable at this point in time. That is why I think the business model will roll out always to the high net worth first. Okay, so just that being said, Coinbase is targeting institutional investors, now officially open for business, and has already been storing over 20 billion worth of clients' crypto over the past 6 years. But its new custody offering will notably be secured through the SEC compliant and FINRA new independent broker-dealer electronic transaction clearing. Okay, so today's launch means that the institutions from both the US and Europe can now store their crypto assets with Coinbase custody. Yeah, so I think we are headed in the right direction, man, Andy.
Yeah, I mean, we look at Coinbase and Gemini per se, right? The Winklevoss twins are doing patent for ETFs, they're doing funds, and Coinbase is also doing the outreach programs or you know, serving the high net worth and the institutions. Not stated in the article, I think there's a portion of it that says that this custody program may also be placed into proof of stake models, right? That brings in dividends and things like that for Coinbase itself. So you see how the whole entire market is maturing. You see how the regulation is coming in to keep mainstream investors safe. So I think it's really how the market is maturing right now, and we are moving off from the hacks, you know, from all the kind of stupid news that's happening, and people get more robust as time goes by. And news don't really.
Systems become more robust.
Yeah, that's the
people get smarter. Right?
Definitely.
And I think we are looking for passive income. I think this channel, despite the fact that CG Market Watch covers a lot of news, but we also are looking at staying invested, making sure that our viewers, right, know what to do in this financial market. Because this asset class is the asset class to be in, guys. Just hands down. But eventually, right, you want to create a portfolio that will provide you that kind of consistent stream of income. But right now, the cryptocurrency market does not really offer that consistently, because right now, if you were to say you want to enjoy, you know, these kind of passive returns, there's no such thing as a fixed dividend.
Yeah.
Okay, there's no such thing as a fixed dividend. Right? Usually in the cryptocurrency market, not many coins, in fact, no coins are mature enough to provide you that because there's zero revenue coming in from any of these projects. Okay, and it's all speculative, and it's very much dependent on how much transactions, especially if you're someone who's mining or staking, you would clearly understand that for you to get the mining reward or for you to earn mining transaction rewards, right? There has to be healthy transactions consistently, and also the addresses have to be growing. There has to be proper transactions on the mainnet. And if, let's say, the transactions are up and down all the time, your dividend as per se, or your so-called your return as per se, is inconsistent as well.
You get affected, definitely.
You get affected. So it's purely capital appreciation at this time. And so everybody's trying to figure out exactly how to do and which projects could which projects could actually do that. Yeah. Is it going to be LTC in the future? Is it going to be BTC? Is it going to be Ethereum? No one knows, right? So right now, for us to create a portfolio, it's going to be challenging, but at the same time, the potential is there. So if you're someone who is looking at solutions for your finances, especially if you're interested in this asset class, don't forget to join CG Premier. That's available for you to sign up, especially in the links below. And of course, if you enjoyed this series of or this episode of CG Market Watch, don't forget to like, comment, and subscribe. And don't forget to click on the notification button. And we'll see you in the next episode.
See you guys.